Are you listening to this ad right now? Do you see how effective podcast advertising is? Do you want your product to have weekly exposure to the most connected accountants and bookkeepers on the planet? Stay tuned to hear more about sponsoring the Cloud Accounting Podcast later in the episode.
You don't see the Facebook stuff coming over into LinkedIn too often, but it's really gotten out of control. KPMG US Chair and CEO Paul Knopp said, "Earlier this week, I was proud to sign a letter with other business leaders to support an orderly transfer of power. The chaos at the Capitol today has no place in our democracy, and we call on officials to restore peace so we can move forward together as a nation." Today is January 10th, 2021. This is the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
Well, David, we thought that 2021 couldn't get any more interesting, and yet here we are.
I think I saw a meme that somebody posted that they want a refund for 2021 because they've done their 7-day trial and they weren't happy with it.
The free trial, yeah.
So let's just back up. So since we recorded,
yes,
the House flipped because of the Georgia thing.
The Senate flipped.
The Senate flipped.
Yes.
There's an insurrection. Trump's kicked off of Twitter. Next day, a new social media launch is kicked off of all the platforms. Even these shopping cart companies like Shopify is banning Trump stores. What a week.
I don't even know where to start. I guess I do want to talk about the storming of the Capitol, the insurrection, the riot, whatever you want to call it. Not necessarily in a political sense. I understand it's a hot button issue. Personally, I think there is no room for violence, period. I felt that way about the protests over the summer. I feel that way right now. The number one rule in my house when I was growing up that my parents had when my brother and I were fighting was no hitting. Regardless of what the argument was about, if anyone perpetrated any violence, you immediately lost the argument. And I feel like that's a good rule in life. Like, you can talk, you can argue, but no violence. And it's like, I think that the tone has changed, especially in our world, in the world of accounting and business, where we try to stay apart from the political discussions, right?
There's that whole, you talk to accountants and bookkeepers, it's like, oh, never talk about politics or religion with your clients. But yeah. I think because of social media, now you know your clients' political views, or I know the political views of many accountants and bookkeepers because of Facebook connections and Twitter connections. And you're right. What people used to not put out there is like in your face now.
Yeah,
all the time.
It's very challenging. And so, again, I don't want to make a political statement, but I think it is not political to say that violence should not be an option. Or if that is political, I'm happy to make that statement. And the business interests that have allied themselves with Donald Trump seem to have also made this decision. This is a straw that broke the camel's back, I suppose. It's really turned the accounting community, at least the Big Four, against Donald Trump for the moment anyway. And we can see this in the LinkedIn posts of the leaders of the Big Four accounting firms. Not only did these leaders write a letter before the riots happened saying that Congress should accept the electoral results, they all signed on to this. There have now been multiple LinkedIn posts from each of the Big Four heads. And I'll read some of them for you here.
So before you jump into that, when they've written these letters in the past, are they writing these letters on their behalf? Like, oh, we are the Big Four, blah, blah, blah. Or are they writing this on behalf of millions of small businesses or businesses that we represent? We're writing you this letter.
So the letter that happened this past week was a business group. It was a group of business leaders in New York. And the Big Four leaders signed on to this letter. And that's generally how they'll do it, right? They'll get together with a bunch of businesses, some association, and sign on together. And so that was a letter from a group called the Partnership for New York City saying, quote, "President-elect Joe Biden and Vice President-elect Kamala Harris have won the Electoral College, and the courts have rejected challenges to the electoral process. Congress should certify the electoral vote on Wednesday, January 6th. Attempts to thwart or delay this process run counter to the essential tenets of our democracy." And signers of the letter included several leaders of accounting firms, such as PwC U.S. Chair and Senior Partner Timothy Ryan, Deloitte CEO Joseph, I cannot say his last name, Ernst & Young U.S. Chair and Managing Partner Kelly Greer, KPMG U.S. Chair and CEO Paul Knopp, and former CEO of Deloitte, Kathy Engelbert, who is now Commissioner of the WNBA. So they wrote this letter, and then the riot happened, and each of the signers also wrote LinkedIn posts that got thousands of likes, and go read the comments. There's a whole political debate happening in the comments too, which you don't often see in LinkedIn. At least I don't. You don't see the Facebook stuff coming over into LinkedIn too often, but it's really gotten out of control. KPMG US Chair and CEO Paul Knopp said, "Earlier this week, I was proud to sign a letter with other business leaders to support an orderly transfer of power. The chaos at the Capitol today has no place in our democracy, and we call on officials to restore peace so we can move forward together as a nation." The CEO of Deloitte US said in a LinkedIn post, "One of the most sacred tenets of our democracy is that we respect the results of free and fair elections and consistently execute the transfer of power peacefully. The events we all witnessed this afternoon with the storming of the U.S. Capitol represent a sad and embarrassing moment, but our great country is far stronger than the abhorrent actions of those who engaged in this conduct." So on and so on with the other posts. That's the general gist. So a real change in tone, in how big business and the big four are relating to what is going on in politics. They're really making a statement here. Like, this is very clear where they stand. And you just haven't seen that before. So this is like a turning point to me in terms of the Trump administration and big business.
Well, it's so public now, right? And this goes back to just like you see the politics of individuals online now and out there. I think a lot of influence that may be happening from the big four in the past was probably backroom deals with Congress people and politicians and back scratching type stuff. And now social media, it crossed that new line where if the presidents can use social media, they're going to have to communicate in that same way.
Yeah.
And make their opinions very public in a way that maybe that was their opinion the whole time, but they would never put it out there like that.
Well, what's been interesting in the LinkedIn comments is seeing people working at those firms criticizing the leaders for their statement, saying, who are clearly supporting the protests. They wouldn't probably refer to them as riots. I mean, there's a whole...
well, these companies have hundreds of thousands of employees. You're going to have... Yeah, you're not going to have 100,000 employees all thinking one political slant, or another, especially if they're in the U.S.
And, right? And there's other people calling on those people to be fired for their political views. Jeez. Yeah, it's nuts. And this is all happening on LinkedIn threads. But, it's going beyond this, right? It's not just the big four making statements. Big tech has made more than a statement. They've deplatformed the president.
Well, it doesn't even stop there. So first, I think Twitter pulled down Trump. First, they suspended him for like 12 hours, and they just turned the whole thing off, I think.
Yeah, they shut down his account completely now.
They shut down, then they shut down Facebook, did something, then they started shutting down some YouTube channels, and then now it's dominoed into like Shopify shutting down like Trump stores. If you want to buy like a Trump flag, that got shut down. And then, remember everybody right after the election was like, I'm moving to Parler. So apparently Parler started getting pulled down from the Apple store, the Google store. Now Amazon deplatformed Parler last night. So it's just this domino effect of these companies just pulling it off. And so this is something I like before this, I've always kind of thought about. And one of the reasons I'm really like a huge fan of podcasting. And if you guys want to know more about this, you can go to like podcastindex.org and really start understanding like the openness of the podcast as a platform. You can never be deplatformed.
Right.
Because we don't really live anywhere.
Well, we have a podcast host, which is like a web host.
But we could put that anywhere. I can run that in my bedroom tomorrow.
Right. Yeah. We could host our podcast on a server in our room, somewhere. If we had to, we could take it out of the cloud and host it ourselves. And we own the domain cloudaccountingpodcast.com. Nobody else owns that. And the podcast is distributed via an RSS feed, which is basically just a web link. So if you have the web link, if you have the link, the RSS feed link to our show, you can listen to it in whatever podcast app you want. Now, I guess, Apple, for instance, Apple Podcasts could hide our podcast, but you could always download another app and listen to it.
That's fine, but it's still available out there. They could filter us out of their view in their podcast player, and they have the right to do that. But we aren't pulled off. Right. And I think it's almost where, are we going to see a swing of the pendulum back to the way the internet originally was, which was very decentralized? I mean, the last decade of the internet has been, you live on platforms.
Right.
You are a YouTube person, even though you could put your own videos on your own website, on your own server, in your own garage. But everything is shifted to these massive platforms. And this is why these big tech companies have so much power and influence. And so are we going to see the internet swing back to where, hey, It's RSS based feeds. You're hosting your own blog, email. Are we going to see a swing back to that?
Maybe. I remember when Hector Garcia, who's like the #1 CPA on YouTube, I think, his channel was taken down for some inexplicable reason. And it's like,
I think it's happened 2 or 3 times now.
Yeah.
Just pulled it off.
Somebody makes a copyright complaint, or maybe he gets caught up in some sort of like automatic filter because he's talking about trademark terms like QuickBooks, or he's using a logo or something. And then it gets shut down, and then he has to petition to get it back. But like if it went down forever, that's his livelihood. That's how he gets clients. That's his #1 source of leads, right? That's a valuable asset. So this is why I have always told every firm leader that talks to me about marketing, the key thing to ensure is that even if you are using all these other platforms like YouTube and Facebook and LinkedIn to get customers and to be out there on the web, you want to own your own channels as much as possible. So what can you own? You can own your domain, so your website, right? Host your own website and make sure that all your content is on that, because it's very difficult for somebody to take away your website. You can always find a new host. It's not going to happen, right? Facebook could shut down your page, or they could do things like make you pay to get people to see it, which they did a few years ago, right? And screwed up a lot of people's business models. But they're not going to take away your website. And then this is why email marketing is also still the #1 thing you should be doing as a firm. If you're not doing anything, you should be doing email marketing, because email is an open platform. Nobody can block you from reaching your email recipients on your list. So building your email list, super
except
critical.
For Google, that would just put you in this Google spam folder. So
yeah,
they kind of can.
Well, no, but they're not going to do it like.
But they can't stop you from sending those emails. Ultimately,
yeah, actually, that would be really interesting if like Google started blocking, Trump emails to his supporters. That would be crazy if that happened. I don't think that will ever happen because email's an open platform. But yeah, so that you want to own your channels so that you can't just get shut down. And that's the lesson to learn from this. I wonder if the Trump campaign or administration has any channels that they can still access their followers through. I mean, I guess it's their email list is basically what they're going to have to use now, because they don't have like their own social platform. And that's what people are talking about. They might build their own now to get around this. But I think that's enough politics for now, don't you? I mean, I've had enough of this. Maybe we should shift to, well, I can't say it's a happier topic, but we could talk about the economy. At least it's not, politics, right?
This episode of the Cloud Accounting Podcast is sponsored by BooksTime. Save time by outsourcing your clients' bookkeeping work to BooksTime. With BooksTime, you get your own dedicated team of experienced and responsive bookkeepers that have deep expertise in cloud apps like QuickBooks, Xero, and Bill.com, and many more. They follow your processes and use your systems, so you don't have to change a thing. And with CPA supervision, you won't need to review their work. You'll never have to recruit, train, or manage bookkeepers again, allowing you to focus on high-margin services, client relationships, and growth. BooksTime has a special offer only to listeners of the Cloud Accounting Podcast. Sign up before the end of the tax season 2021, and you'll get $500 off your first invoice. To get started with a risk-free trial and see why leading modern accounting firms around the country rely on and love BooksTime, head over to cloudaccountingpodcast.promo/bookstime. That is cloudaccountingpodcast.promo/BOOKSTIME.
So we had that disappointing jobs report. I don't know if you saw this, David, but it looks like we're backsliding a bit. We're not getting the jobs back anymore. We're starting to lose more. Right?
I think I've heard a little bit. It was not a good. It's basically where it was in March. We had like the same amount of job losses again. It's like a restart of the lockdown all over again.
Yeah, because the surge has depressed retail and employers, according to the U.S. Bureau of Labor Statistics, in December cut 140,000 jobs. Now, here's the good news in the accounting and bookkeeping world. Accounting and bookkeeping sector added 2,300 jobs last month, and professional services overall actually did better. The unemployment rate itself did not change. It's still at 6.7%. So this just shows you the two economies that we're in right now, where you can work from home, you're okay. It may not be great, but we're not losing those jobs. We're even gaining them. Whereas if you work in retail, if you work in a job where you have to see people, it's not looking great. I mean, I think the unemployment rate for people who like don't have a college degree is like 10% or more. That's the situation there. If you want to feel better though about being an American right now, given everything that's going on, our U.S. listeners can at least take comfort that they're not dealing with Brexit. I spotted this article thanks to Brian Strieg on Twitter. He shared a story from the New York Times called "A Week into Full Brexit, the Pain for UK Businesses Has Arrived." And oh man, I would not want to be an accountant supporting a small business in the UK right now that ships into the European Union or has customers in the European Union, because apparently it's just a disaster. The British economy, according to the Bank of England, is going to shrink 2% over the next few years because of all the friction of not having an open border when it comes to goods and services. Because Brexit happened at the last moment, the deal was signed. They did sign a deal for products, but not for services. And so there is a way for these British businesses to export and import from the EU, but all this happened at the very end of the year. The deal wasn't reached until December 24th. The text wasn't circulated until December 26th, and all of the rules and regulations weren't finalized until December 31st, and the new law took effect January 1st. So at the borders right now, there's just a huge mess. There's a parcel delivery company called DPD that has had to pause service to the European Union after 20% of parcels it handled had incorrect or incomplete data and will have to be returned to the center. Can you imagine if 20% of the parcels going from the United States elsewhere in the world had to be returned to the sender because of paperwork issues? And apparently there's shortages on shelves in France because a bunch of stuff that was being shipped from Britain to France didn't have the right paperwork. I mean, it's expensive, right? When you don't have open trading situation.
Yeah.
Just be happy that, we're not dealing with that right now. And for our UK listeners, we sympathize with you.
Well, there's something else to be happy about. PPP approval loans are getting approved.
Yes.
Right. They're
reopened
up again.
Yeah.
It looks like it's going to be January 11th. But did you know that they're opening this up in a staggered way this time?
I saw that minority women-owned businesses get first stab.
Yeah, first only community financial institutions. So this would be banks and credit unions that tend to low-income communities. That's happening, which is good. And then some people are getting their stimulus payments, but others aren't. I don't know if you saw there were some problems again with TurboTax and H&R Block.
Yeah, this is so weird because I feel like this happened the first time, where if you filed with TurboTax or H&R Block and you got your refund through them, they set up a temporary bank account into which the refund is deposited. They take their fee for the software and then give you the rest. You pay for the software right out of your refund. Yep. So if you did that, the first time there was a problem where you didn't get the money in your bank account because Intuit got it temporarily and then they had to fix it all, right? And so this happened again. Millions of customers didn't get their money because of this.
And some of them were even sent to the wrong accounts. This was H&R Block tweeted about that.
Oh boy.
And so apparently now they've officially said that it's been fixed. Things are back on track. They've been working with the Treasury and IRS to get these things back on track. And so that's going on with the distribution. And then another related story, I don't know if you saw this, the Treasury is actually sending this out as debit cards, prepaid cards.
They didn't do this the first time.
They did not do this the first time. So you may want to make sure your clients, if they're asking, hey, I didn't get my stimulus payment, check your mail, you might have a debit card. So there's a lot of branding going on here. So IRS and Treasury urged eligible people who don't receive a direct deposit to watch their mail carefully during this period. The prepaid debit card, called Economic Impact Payment Card, is sponsored by the Bureau of Fiscal Service and is issued by the Treasury's financial agent, MetaBank, NA. The IRS does not determine who receives the prepaid debit card. So the IRS doesn't determine who gets it, but they are obviously just sending them out. And this is I think that experiment of a federal digital dollar here, right? Because now whoever got these debit cards, let's say this gets juiced and there was a $2,000 payment that goes out. They're just going to up that card.
Right.
Right.
Yeah, every American, every taxpayer should have a debit card number or a bank account automatically assigned to them by the IRS so that we can do this sort of thing in the future. It just makes so much more sense than mailing people checks. I can't even imagine what our international listeners are thinking about this whole thing. In order to send out these $600 stimulus checks, the IRS has to literally cut millions and millions of pieces of paper and put them into envelopes. And I guess they don't put stamps on them because they're the IRS, right? But then they have to give them.
Yeah, so it's pre-sorted first. They have a picture of the envelope. Pre-sorted first class mail, U.S. paid postage.
Yeah,
mail services Inc.
It's crazy.
So tying this back, right? So not only do you get the debit card, right?
Yeah,
and we talked about how before, this is a boon for Square with their Cash App, and PayPal recently announced, hey, they're going to let people cash their stimulus paper check through their app, right? And they'll be able to take a picture of it, and within minutes, they'll be able to get the balance deposited into their PayPal or their Venmo account within a few seconds. And then it eliminates all the check cashing fees, et cetera. So it's really going to help if you're unbanked. You just get one of these apps to cash your check, right? You either get Venmo or PayPal, or you get the Square Cash App. But here's the real reason people are going to do it. I found another article that was on payments.com. There was a report from the New York Times. Traditional banks, because a lot of people have overdrawn accounts now.
Right. Well,
or you have overdraft fees. So basically, as soon as your stimulus goes in, they're just going to take the deposit fees that you owe the bank out of it.
Right. This was part of the issue the first time.
So then people just will not deposit their checks at a traditional bank, and they're going to use one of these apps like Venmo, the Chime, all these neobanks. They're going to jump into that. So which I don't blame them.
So it's just juicing up the balance sheets of fintech. Hey, before we go on to more apps news, because I think this is a good transition point, I want to keep talking about stimulus.
Yeah.
And there was one thing about the PPP that I saw this week that I missed the first time. So the new legislation has text in there that addresses those agent fees. Remember the agent fees, David?
Yes.
That CPAs and
the banks got, but not the accountants and bookkeepers.
Yeah. So the banks they got their bank fee or their lender fee. And then there was that whole agent fee thing that theoretically, if you were a CPA or a bookkeeper, an accountant preparing a loan application on your client's behalf and you signed it, you could get, as the preparer, you could get a up to 1% share of that loan, which, hey, that could be a lot of money, right? There was a accounting firm here in Scottsdale that was suing a bank because they did a $200 and something thousand loan. They wanted 1% of it, right? Hey, $2,000, right? Not a bad fee, especially if I'm not charging my client for my time. And the banks said, some of them paid the fee, by the way, but most of them said, no. The legislation actually says you have to have a pre-written agreement with us. We basically have to agree to pay you this in advance, and you can't just get it because you've sent in the paperwork. And it looks like Congress has done their buddies in the banking industry a solid and put into the legislation some clarifying text that basically says retroactively, if you didn't have an agreement with that bank in advance, the bank does not have to pay the agent fee. So that's the nail in the coffin for all of these dozens of lawsuits that borrower agents have filed seeking a cut of the bank PPP fees. And there have been a lot of them. Many small accounting firms have filed more than 60 suits involving more than 100 banks to try and get those agent fees. And nope, banking industry won that one. Interestingly here, this was an article in American Banker. It says, quote, a spokesman for the American Institute of Certified Public Accountants declined to comment, unquote.
Hey, I'm hoping that you're enjoying this episode of the Cloud Accounting Podcast. Normally, this is part of the podcast. There'd be an ad for a great product or app. But as you've probably noticed, this episode is missing a sponsor. So Blake and I could really use your help. If you know an amazing product or service that is looking to get in front of forward-thinking accountants and bookkeepers like yourself, please send them our way by emailing david@cloudaccountingpodcast.com. Make sure they tell us that you referred them, and I'll be sure to send out a nice Cloud Accounting Podcast fan package to you and your firm. Now back to the show.
So that's, I think, all the stimulus news, all the economic news. Maybe we should dig in further to app news.
All right, let's jump into app news. So the kind of a big story here, Ted Callahan. So if you go back to October of 2019 at QuickBooks Connect, remember when we used to do conferences in person?
What?
We actually had Ted Callahan on the podcast before. He was the leader of the QuickBooks Live group at Intuit.
Yes, that was my favorite interview because we actually got the details on QuickBooks Live from the guy running it.
Yes. Yeah. And so now he is has been announced as the new leader of the accountants business leader.
So does this mean he's in charge of QuickBooks? overall?
This would really more of the pro advisors and accountants.
Okay.
So he's in charge of, so instead of just being QuickBooks Live, he's in charge of the pro advisors. And remember, we had Reej Mashirgi on the podcast, right? She, at the time, she was the accountant leader for the last, I want to say like 2.5 years of the pro advisor accountants, the product and team at Intuit.
So did she get promoted?
So it feels like this is some sort of promotion to where there's a new layer or a business unit possibly at Intuit called QuickBooks Experts Team. So she's going to be the accountant leader on that team. So it feels like there's a bigger umbrella that accountants are now rolling into.
Got it. Experts in general, not just pro advisors. Cool.
That's what it feels like. So I don't know with the what I don't know what that means. But for Ted Callahan, it's going to be he's going to continue to develop new innovations for the QuickBooks platform, all the accountant offerings in QuickBooks Online Accountant, and then involving the Pro Advisor program. So he's going to be heading up all those functions.
Well, I have exciting news, David. There's another tech startup that wants to be an accounting firm that just raised a bunch of money. This one is called Pennylane, and they're French. Ooh la la. They raised $18.4 million for an accounting service that combines automated processes with human accountants. And that's according to TechCrunch. Same old story, David. It's a software as a service company that makes accounting software to manage your financial data, but also includes accountants on the team that will help you do your accounting and your bookkeeping. You can talk with your accountant through the company's platform, and it becomes, quote, a single source of information for financial data.
And it looks like Pennylane, so they already have 550 customers, and they have about 30 accountants working for the company in-house already. And so if you think back to ScaleFact, who raised $100 million, and we're not sure ever broke 500 customers, or at the one time they were claiming they had 750 or they were on track for 750, they seem to be doing something okay here.
Yeah, so this is interesting because they actually reveal some revenue numbers as well. They have 2 million euros in revenue. So that's about 2.5 million US. And you said 550 customers, right? So let's do 2.5 million divided by 550. So their average revenue per customer is $4,545. I think I did that right. Because if I multiply back by 550, So $4,500 per customer. Seems like they're pretty up market from what most accountants and bookkeepers would be charging on a monthly.
Yeah.
Or no, wait, that's per year. That's per year. Hold on. So
divided by 12.
Yeah. Whenever we're doing math live on the show, I got to remind people that I'm an accountant, not a mathematician, and I really should have an Excel spreadsheet open right now because I don't, and I make mistakes if I don't.
But it's fun doing the math real time, though.
Okay. So $379 per month.
So that's a QuickBooks Live competitor.
Yep. QuickBooks Live competitor and a competitor to many, many of our listeners, I'm sure.
It wasn't clear. Obviously, if they're using what tech stack they're using. They do say that they're going to, pull information from Stripe, Zoho, and other places, but it's not really clear if they're building their own tech stack or using existing.
I think it's pretty clear that they're building their own accounting software. But is it clear?
They have a lot of customers after launch. That's fast. I think you could take off the shelf tool. You could take Xero or QuickBooks and build a service like this and possibly get 500 customers in a year. I think if you're building your own software, that's super impressive.
So I'm looking at their website right now, which I just went to it and it was in French. And then Google said, hey, would you like to translate this into English? And it magically translated it. So I'm trying to find if they have like screenshots on their website that show a platform or if this is really just stitching together a bunch of services. So they have a list of logos of solutions they connect to on their solutions page. It doesn't look like they connect to any accounting software. So that makes me think that they've got their own software here. Yeah, they say reliable and real-time data for your startup thanks to many APIs of our accounting software. So this is software plus a service, really, not just stitching together a QuickBooks to something or a Xero to something.
Yeah, I see how they have Go Cardless and They're integrating other people in. Interesting. So yeah, I know some of these places though too, they do still have QuickBooks or Xero under the covers, but they just build like their own dashboard.
That's true. They could be doing that
in between. They could just be playing in between, and then on top of that, it's how much is just humans doing this,
or it could be like an Indinero, right, where they have their own accounting solution under their own GL,
which very well, but it probably took Indinero half a decade to get 500. It's a lot. Like building it yourself, building your own
accounting software
GL is a long process, and so that's just they've grown a lot for 1 year. So it tells me maybe that's or they already had kind of a firm going, and they're just clowning those clients, right? They might even be on the platform.
Or just bought a firm.
These are our customers. Yeah, they just already have those people as clients. So that makes sense. Another one. What did I have? Avalara unveiled a cloud sales tax account return solution
for accounting firms.
It's called Avalara Managed Returns for Accountants, MRA. And it sounds like, if I had to put this into a different terms, how you can use outsourced payroll, so Intuit Payroll or ADP or any of these, you can be kind of the middleman.
Yeah.
And so really ADP is doing all the payroll for you, and it's filing the reports, and you're just kind of offering that as a service on the front end. It feels like Avalara's built something like that for sales tax. So you can offer this sales tax preparation services to your clients. But on the back end, it's Avalara's doing everything. It's a full service.
This sounds great because I always love being the main point of contact. Right? That's the value I create as an advisor. Is my client just wants one person to reach out to. They send me all their stuff. I put it into this platform. Avalara's experts take care of the sales tax stuff. Like, this is cool. I would look into this. So
it was a press release, so it doesn't say too much, but it looks like they're having a webinar on January 21st. So we'll have that. You hit the show notes and the link will be in there to learn more about this. But I think it's it's interesting. They're taking that model of the payroll industry and moving it into sales tax, SALT compliance.
Avalara Managed Returns for Accountants. Now, speaking of more resources for accountants, Deloitte has struck a deal with tax analysts to make their law library public. I was trying to figure out what's the angle on this. Like, why would Deloitte buy tax analysts' solution? It's called Tax Notes. It's they bought the whole, or they didn't buy it. They entered a deal with tax analysts to make their Tax Notes product portfolio available to the public. This is a federal tax law library, and Tax Analysts is a nonprofit. So I guess Deloitte's going to pay to make this stuff public, and now anyone who wants to can go to taxnotes.com and do research on federal tax issues. So that's pretty neat, right?
Is it just an SEO play to get the eyeballs and the traffic and potential customers?
Yeah, maybe that is what's going on here, is that Deloitte will be able to now access or get information about people using taxnotes.com. Like, I'm imagining if I'm, let's say, an in-house finance person and I want to do some tax research, I go to taxnotes.com, and then maybe there's a way for me to consult with a Deloitte expert, something like that. Could be that.
Or sign in, or it'll be gatekeeper by an email address and you have to sign in, and now Deloitte has all those. Or it's just Deloitte being a good corporate citizen.
Yeah, I always want to know what's their reason for doing this. Yeah, there's got to be an agenda here.
So I have some neobank news, and somebody tagged me in a Facebook thread. There's a bank called Azlo, AZLO.
I'd never heard of them before.
They're owned by BBVA US, who last month,
that's your
about
bank,
a month
right?
and a half ago, that's who I have for my small business. I use BBVA US. BBVA is a global company, but they sold their US branch now to KeyBank. So BBVA US is now going to be owned by KeyBank, which I think is out of Pennsylvania. So BBVA owns two banks, two neobanks. They have Azlo, which is really the small business bank. And they really have been working at this for 4 years. Right? And it was all about, for founders, freelancers, and small business owners, right? They really tried to build a small business focused bank, neobank. And then the other bank they purchased was a company called Simple. And Simple Bank,
I heard of them.
I met those founders almost a decade ago. So they were like the first neobank.
Yep.
Where you did everything online. You had the little debit card, and you got your account online, and you had the little graph and the financial. It was a bit personal finance geared.
Yeah, and
so
that's the interesting thing is, so there's a lot of these fintechs now, or neobanks, that are targeting startups and small businesses. Simple started out targeting consumers. They were a consumer bank product, and you could budget with them. That was a big thing. The budgeting was integrated. right?
And now a decade later, every week on the podcast, we talk about 3 new banks that have launched. And even this week, now I see, there's a bank called Oxygen. And Oxygen, they just closed a $17 million round. So on one hand, it's confusing. So you have, over here on this hand, you have a bigger bank shutting down their neobanks. In the meantime, neobanks everywhere growing like crazy and taking as much funding as possible. So it makes me kind of wonder, like, what does BBVA possibly know or see? It could just be part of the deal when they got bought by KeyBank, but is the thought process like, okay, we learn what we need to learn, we'll just put that in our regular business checking account, whatever this extra functionality is that these neobanks are offering, and just move forward with that going forward. But people are pretty upset because I think some people that use Aslo really liked it.
So here's my theory about all this. It's that the VCs have caught on that fintech, neobanks, app-based banks are going to be huge, and somebody is going to win, and it's going to be the Facebook of banking. And they're going to probably end up taking on Chase and Bank of America. They could disrupt this gigantic industry. And so the VCs are pouring all this money into this realm, and startups are taking the money. And so we're seeing all these apps sprout up, and a lot of them are going to fail, and they're not going to get traction. And those ones,
or if it's the Facebook model, whoever's winning, let's just say it's Square. Square's just going to start buying all these guys up in the same way Facebook bought up all their competitors.
Exactly. So you either want to, ideally, you end up being the app that dominates, or you just get bought by a bigger one, and the investors still make a ton of money, right? So
do you think this was just timing? Like BBVA's senior leaders, they understood this was coming, and they tried to buy these companies 5, 6, 7 years ago, and it was just too early. The timing was off, and it just never happened.
It's it's hard to know, especially with a bank that big, like changing priorities. Like to them, these little apps are like nothing. It's like a drop in the bucket, right? So for them to like shut down something they've invested, I don't know how much they spent, like $20 million. It's like whatever, rounding error.
I remember. It's funny to think about that. So Rubbermaid was just a gigantic conglomerate, right? Yep. They own like a little like scanner division that like does like scanning of bills and invoices or something. And I remember meeting with somebody on that team.
Rubbermaid.
Rubbermaid. Yeah.
Owns a scanning company. Okay.
And then I remember, working with a developer or whoever ran that division, and about integrating with QuickBooks. And the reality was, he's like, in the grand scheme of things, like the revenue this little app's going to make from integrating from QuickBooks, like he's never going to be able to get anybody on board because Rubbermaid's selling billions of rubber containers. Right? So you're right. Like in the grand scheme of BBVA, these newer neobanks just were so teeny, like nobody cared. Yeah. It's like, it's just a distraction. So let's just kill it and move on.
We'll see what happens.
This episode of the Cloud Accounting Podcast is sponsored by Bookkeep.com. Do you have clients tracking sales and payments in Shopify, Square, ShopKeep, Grubhub, or Upserve? If you do, you know it's a monthly struggle to import the sales into QuickBooks or Xero using CSV import files. Maybe you've even tried one of those apps that syncs every transaction to the accounting system, only later to discover that you can't reconcile the thousands of transactions it imported against the deposit that was made to the bank account. Seriously, do you need these thousands of burgers and fries orders entered in the accounting system? And don't forget about tracking all those fees correctly. Bookkeep will summarize all these transactions, including the fees, into one nice daily journal entry, posting it to QuickBooks or Xero so it'll perfectly match the deposited amount, making all your reconciliations a breeze, your reporting accurate, and best of all, it'll help keep your client's accounting system clean and efficient. Jason Richardson created the widely used ShopKeep point of sale from the back of his retail wine shops. Years later, after witnessing the explosion of apps with poor accounting integrations, the entrepreneur turned developer teamed up with his former CFO and CPA, Ruth Koo, to create Bookkeep.com. Listeners can get 1 free month of Bookkeep.com by using promo code CLOUD, CLOUD. Head over to cloudaccountingpodcast.promo/bookkeep. That is cloudaccountingpodcast.promo/BOOKEEP.
So where do we want to go from here? I've got some tax news. The IRS has not been in such good shape recently. I think we talk about it on like every episode. There's a report from the Treasury Inspector General for Tax Administration, the auditor of the IRS and the Treasury, like pointing out some huge inefficiency or big gap at the IRS. And there's this debate constantly over, is it the IRS is just bad at doing its job, or are they under-resourced? Maybe it's a little bit of both. Well, here's an example of how perhaps funding the IRS would help us raise significantly more revenue as a country, because this auditor found that for the IRS is overlooking billions in potential taxes from non-filers. So, are you familiar with Form 1099-K, David? You must be very familiar with it.
Not the K.
So this is the form that merchant services processor.
Oh yeah, that's the one So
yeah.
They send out. So if I take money, if PayPal's my way I get paid, PayPal will issue me one of those, and I don't.
Yeah,
paying me, just have to issue me a 1099 miss.
If they send you
NEC.
So the Form 1099-K, this is what the merchant processors have to send people who get us over X dollars from PayPal or through their Visa, MasterCard, all this. Like this is the form that you get. Instead of getting it from every single person who paid you through that service, you get this 1099-K. They also send it to the IRS, and the IRS is supposed to be looking at these forms and figuring out, hey, is everybody reporting this income or not? And basically, due to
there should be a reconciliation somewhere.
Yes, and essentially, due to resource constraints, the IRS is not doing this. And so the Treasury Inspector General for Tax Administration said that because the IRS is not creating and working on the non-filer and under-reporter cases for Form 1099-K, they aren't even trying to do it. And if all they did was focus on those of 1 million or more for businesses and 100,000 or more for individuals, the IRS could potentially assess an extra $5.723 billion in taxes. So that would be just if they went after the big fish. The auditor is estimating that there might be as much as $335.5 billion in Form 1099-K income that has a filing obligation but was not filed. So that's a lot of tax.
So I think once Congress finds out or learns about this, you're going to see where these big companies, the merchant service companies, are going to have to withhold some sort of tax before they put the deposits in.
That would be really interesting.
Just in the same way, like Amazon with the Nexus, right? Amazon's having to collect that out and keep their piece of that. So with their sellers, I could see the same type of thing happening with
Amazon isn't doing that. We actually had a listener contact us, and it's something I want to dig into more, but like if you're a third-party seller on Amazon collects the sales tax for its own sales and remits it, but not necessarily for the third-party sellers. And so there's all this untaxed activity on Amazon right now that Amazon's basically said like, hey, not our problem, it's the seller's problem. And it's creating huge issues for those sellers who don't know they have a income tax or a sales tax filing requirement. Like it's a huge mess. So it's across income tax and sales tax. What else in the world of tax? BKD has made one of those often cringy, you know those often like cringy videos that a firm will make every now and then where they're trying to make learning about tax or audit fun, and they'll make like a parody video, or then they'll get all the staff involved, and often it's just like terrible. Usually it's the Big Four where it's like really bad. You know what I'm talking about?
I've seen these videos. Yes.
Well, BKD has made a film noir tax parody. And when I saw this on accounting today, I thought, oh my God, it's going to be another one of these just cringeworthy videos. It's a 30-minute parody in the film noir style. So black and white, like 1940s detective or something like that. And it's called The Missing Deduction. And it's fantastic. It is really good. It's worth watching. You just got to see it. The dialogue is good. They obviously hired like a cinematographer and a director, and they filmed this in Springfield, Missouri. Do you want to hear a little bit of it?
Yeah, let's play some.
As I've generally been calling it lately, the qualified business income or QBI deduction have abounded since the provision was created under the legislation formerly known as the Tax Cuts and Jobs Act. This newly created provision, effective in 2018, provides a 20% deduction of domestic qualified business income from partnerships, S corporations, and sole proprietorships to non-corporate taxpayers.
Mr. Simple?
You can call me Tax.
Also available for 20% of qualified real estate investment trust dividends.
What's your story?
Oh, Tax, something terrible has happened. My Quincy's gone missing.
Missing, you say? Tell me more about this Quincy character.
Well, his name is Quincy Benjamin Ingrid Donaldson, but everyone calls him Cupid. He stole my heart.
Where did you first meet Mr. Cupid?
Oh, I remember it like it was yesterday. It was January 1st, 2018. We were ringing in the new year.
All right, everyone, it's time for the countdown. Are you ready? 10, 9, 8, 7, 6, 5.
Anyway, that's just the beginning of this film noir mystery. And you can learn all about Section 199A and Cupid by watching the video, which was written by Damian Martin of the Simply Tax podcast. So there's
wow.
Yeah. All right. One more story about app news before we go. Actually, I missed this one. EY and Microsoft are building, or expanding rather, an Xbox blockchain smart contract platform. So Ernst & Young has partnered with Microsoft to build a blockchain-based solution to collect gaming rights and royalties on the Xbox platform. This is a real-world example of how blockchain could actually help speed up the payment of royalties to game developers and designers and the publishers. When you buy a game from, say, the Xbox app marketplace, whatever they call it, and maybe you pay $10 for some sort of indie game, there could be a smart contract in the platform that then sends out Bitcoin or Ethereum or whatever cryptocurrency to, the guy who wrote the game, the person who composed the music, the publisher. Everyone gets their cut, and it all happens instantaneously without having to reconcile a bunch of stuff down the road.
Or if let's say Xbox becomes Xbox as a service, and it's one flat fee per month, and you get unlimited all-you-can-eat games. Now, that can be distributed out on how many minutes you're playing a game.
Exactly. Yeah, that would be crazy.
Real-time calculations. Yeah. So I have a story that's going to make you very, very, very excited.
Ooh.
So this is a story in the Wall Street Journal. So the U.S. Accounting Standards Center looks to tackle controversial topics in 2021.
What controversial topics are they going to tackle?
So FASB is expected to give certain priorities to certain issues this year. So yes, they are going to address all confusion related to pandemic accounting. Right, they have to address that because that's just going to hang around here in 2021.
Yep.
But they've prioritized the discussion and decision on recognizing goodwill.
Oh, they're going to move forward on this. Interesting.
They're going to attack goodwill.
So
it's a hotly debated topic in the accounting world.
I think we could debate that, whether or not it's hotly debated. I did see recently an article in Accounting Today called "Cost versus Value: Is GAAP Obsolete?" But that's basically the only thing I've seen in the accounting press since the last time we talked about this. It's worth a read. Marvin Weiss, a retired professor at the New York Institute of Technology, wrote in Accounting Today that, quote, "We are now in a new era in which knowledge and skills have become the key drivers with the shift of productive activity to low-cost producers outside the U.S., unquote." And in this article, he points out that GAAP distorts the matching principle by forcing companies to immediately expense costs to acquire people and other internally generated intangibles, which, as anyone who has studied this knows, completely distorts the results of companies that deal primarily in intangibles, like a lot of software companies, like biotech companies, anyone that doesn't manufacture, which is a lot of the economy these days. It's a good read, and I hope FASB addresses it. Although I'm not too confident that they're gonna do anything super dramatic. But that's what needs to happen. Is it's not just the problem with goodwill; it's the problem with how GAAP treats intangibles. If you're not making something that's physical, if you can't see it, then the way we treat it in accounting is often wrong. It violates the fundamental principle of accounting, which is expenses and income should be matched in the same period, and nobody really seems to want to do anything about that because it would be a humongous shift, right? And it would have to be something that takes place gradually over years and years to get this aligned up right.
Yeah, and to set expectations, they said they're unlikely to finalize anything in 2021.
They're just going to talk about it.
They might unveil a proposal.
Yeah,
by the end of 2021. But that's one of the critics, or is that it just takes them. They're not moving fast enough to enact these new rules.
The good news is that creative accountants, It's always kind of a cringy term, but if you are an innovative accountant, you are probably preparing an alternative accounting method financial statement for your client if, GAAP doesn't work. And so companies use their own metrics that GAAP doesn't recognize, and they can present those to investors. And I think smart companies do that, right? Like all the SaaS metrics that software companies use, they should be disclosing a lot of that stuff to their investors so that you get a real picture of what's going on, because like the actual GAAP financial statements don't help. What else? We've been talking, David, for like almost an hour. I think our time is almost up. So I'm going to have to save a lot of this stuff for next time.
We didn't get any reviews or any voicemails. It's very heartbreaking to me. Like I really wanted to hear some voicemails from people that last week we talked about the successes of people that got the PPP loans, like something creative one of your clients have done. I'd love to hear, a story. If people want to call and leave a voicemail, Blake, what's the phone number?
That number is 202-695-1040. We know you're listening because we can see the download numbers, and those are pretty good. So we encourage you to pick up the phone, give us a call. And hey, look, if you prefer to record it yourself without calling the voicemail, I know that can be a little intimidating because you feel like you only get one shot. Go ahead and record on your computer, record an MP3 file or a WAV file, and email that to us, or send it to us on Twitter or LinkedIn. I am at Blake T. Oliver. How about you, David?
I'm at David Leary on all the socials.
And I know you got opinions because people do message us. They message us our opinions, but those don't necessarily make it on the show. If you put it into an audiogram, put it into a something we can play on the show, we'd love to share it with our listeners.
We can't read a Facebook Messenger conversation.
Well, I don't have a way to put that into my feed reader very easily, so it's like I lose that stuff. But
that's why. Yeah.
Yep. Well, that's it from me, David. Until next time, have a great, enjoy your extended free trial of 2021. I'm going to give us all another 7 days. Hopefully it gets better.
The sales guy's calling you because you still haven't put in your credit card yet. You're like, hey, can you? I didn't have a chance to try out the app yet. I need 7 more days. Can you extend my trial out here for another 14? All right, we'll see how this goes.
Let's give it another week. All right, talk to you later, David.
Awesome. Bye.
Bye.
Time for the classifieds. Does your sales team know which invoices are overdue, due, or paid, or which clients have been invoiced, or what the total receivables are? Breadwinner for NetSuite offers a powerful two-way integration solution between NetSuite and Salesforce and can be set up and configured in just under a day. Your team can raise NetSuite sales orders as invoices, track their status, quote complex NetSuite pricing, and much more, all from within Salesforce. Get the integration that works immediately and saves staff time, increase data accuracy, and accelerate your business sales cycle. Start your free trial of Breadwinner for NetSuite today at breadwinner.com/NetSuite-Salesforce. We have to tell you about a new app on the QuickBooks App Store called Uncat. It has nothing to do with cats. It has everything to do with fixing uncategorized expenses. If you're still exporting spreadsheets of uncategorized expenses from QBO to send to your clients, you need to stop doing that. Uncat notifies your clients about uncategorized expenses and lets them add descriptions and receipts online. You can then assign expenses to the right accounts, and everything syncs with QBO so you don't have to copy and paste anything. Uncat is fast and easy for you and your clients so everybody's happier. So ditch the spreadsheets and manual data entry and head over to uncat.com. As a Cloud Accounting Podcast listener, your first client is free. That's www.uncat.com. Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info.